Okay. Before we start, just guys, read through very quick. Get your coffee. It is a very sunny day outside, but it's still a bit chilly here in the office. Don't know for what reason. But still, it's a beautiful day. The week has been really good. We've been having some huge movements that we're going to be discussing today. So yeah, let's move on. I think everyone had a time to read it. I hope so. So let's move on. What will we looking today? Well, I was like, what sort of topics should we be looking today? Because there's so many things happening in the global market. That is no joke, right? So I'm not peculiar about what should we looking today, but I've selected two topics. First topic is geopolitical tensions and how can we catch those volatility, because there is plenty of volatility at this moment for the market. We're seeing it on euro dollar, for instance, dropping more than 2% in less than a week. So there is definitely some opportunities in the market, like gold going up as well. Okay, so there are some things happening on geopolitical tensions. Of course, we all know, we've seen the battle, okay, again, happening, unfortunately. And how can we catch those opportunities? Because this is the type of volatility that is always welcoming to us, right? And what are the NFP expectations? NFP coming higher? Is NFP coming lower? Where is the market going? Where to? Okay, so then we're going to wrap up. Please, as always, send the questions through on the chat. I will definitely read those questions every time they pop into me. I have 3 screens in front of me, 1, 2, and 3, and this one is dedicated for only you guys, so I can see the chat, I can see the participants, everything in here. All right, let's get started. Okay, so I want to start with a question. Okay, how does geopolitical tensions, okay, affect the market? Well, more specifically, the Forex market, okay, because we look at it and we're seeing some things happening over the weekend, especially when everything started on Friday. Well, it was Saturday morning here for me in Australia, but it was probably Friday afternoon, Friday night for you guys. So how does these affect the market? Well, we do have some things. I have some notes here on this screen, so I will be taking. I've took some notes. So there, the Forex market specifically, it's moved by data. It's moved by fundamentals. Like the first thing is political instability, right? So political instability. So Satish sent a message saying flow into safe haven currency like USD, CHF, and JPY. That's correct. I was literally gonna explain this, but this is pretty much it. So when we see things happening like wars or tensions, or even let's say Iran and Israel, as we had some time ago, and we're having again in Israel is always bombarding other countries. What does that shows to investors around the world? So especially investors on European emerging countries, what does that show? Things are not going well. And if things are not going well, therefore, we need to move our money out from the area that is not going well. And then we look to history, right? What has been the most stable economy around the world for decades? Okay. Well, it has been USA, it has been Switzerland, and it has been Japan. Even though Japan has a negative, well, it had negative interest, it's still good to park your money in there. Okay, so take as this. You have $100 million somewhere in Europe, in German, for instance, in fixed income in German. The risks of German getting involved in a fight is very low, okay, but it's close to, so it's on the same zone, same area, okay. I'm not saying that Germany will actually go and fight with everyone, no, but it's close to it. It's close to the actual fire point. So if something goes wrong, something can happen on German, and then therefore your money is there, it's parked there. So not good, right? Okay. So what's going to be the smarter decision? Move your money to a safe haven. Move your money to USA. So we've seen the Fed has cut 50 basis points on the interest rates, but still, it's not about how much you're going to get. It's about how safe you are. Okay. And once you move your money to a safe haven, like say USA, you pretty much buying US dollars. So when we see, let me get out of this screen now. So if we look to euro dollar at this instance on a 1 hour chart, we can see that it has been dropping since the 1.1250, okay, somewhere around here, all the way back to where it is now. So that is 1.5% drop, 1,708 points, so 170 pips, okay. So it is a big move, and we all know that this happens quite frequently on the market, especially if we look on this move here as well, right? 1.7, this one, 1.9. So the one thing is, when you buy in US dollars, the US dollar is strength. Okay, so we have the base and we have the quote. And when people are looking for US dollars, as they are right now, because the economic stability, as a global reserve currency, as a high liquid market, very stable political, and the central banks, there's a lot of credibility around the central bank. They are the one that is made, most of the trades around the world is made on US dollars, as well as, you know, very less crises happening in US. Of course it happened, but it's less probable that it will happen every 5 years, let's say. So people will move to safe havens. It's places that they know that they can count with the money, and they can keep the money in there for long as they need. Now, we've seen this happening on the US dollar. Will this continue to happen? Well, now it comes the question that I've just done. So how to catch those opportunities in the market? Well, I don't want to, you know, it's really sad when those things happen. When geopolitical tensions happen, it's really sad. Unfortunately, we can't control those things because it's two countries, or maybe more country, or maybe even one country trying to put tension in another country, and it's of course it's not nice, you know, but we can't control. So when those things happen, we have to be prepared. We have to prepare ourselves, and we need to watch closely the context of why are they doing this, and how they are doing this, and what are they saying they will do. So if they continue to actually do bombarding and sending bombs and drones, sorry guys, every weekend or every day, then of course the US dollar will keep stronger, 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 right? So if we look to the US dollar index, for instance, right here, we can see that the level that I've targeted just actually got take profit. But anyways, so coming back to here, this was the level when the Federal Reserve done the 50 basis points cut. Okay, let me take this off. And this thing off here as well. So this was the level where the 50 basis points cut was made. And we can see that the market, of course, went down and then up and then back down and then stagnated on this area. And then now it's above the area, pretty high above the area, probably somewhere between 0.7%, yeah, 0.9%. Okay, so we will keep seeing the US dollar continue to strengthen. Well, I don't think so. Okay, I don't think so. I think we are on a consolidation zone here. This is a 1 hour chart on the US dollar index. And the probability of this coming back down to these levels here, it's much more higher than the probability of the US dollar actually breaking through this stop. Okay, so if the US dollar actually break through this stop, then we can see US dollar coming to this area. Okay, and this would be very bad for euro, because as we all know, euro dollar is pretty much the opposite of the US dollar index. And if we actually see where is this invert scale here, we can pretty much see that this is the US dollar index, right? And if I add the US dollar index here, XY, it's exactly the same. Look at here, okay? Look at that. So it's exactly the same. Of course, some moves are a little bit different. So doing some correlation analysis, we can see, well, let me put this back. There we go. So that's why. So doing the correlation analysis, I do believe that we may have a pullback
That's okay.
towards this area. So coming back towards this area first, then if we break through this level, then pullbacking and going back to this area. Okay, and then of course doing the range formation. Okay, doing the range formation that I've been talking about since the beginning of this week, that the euro dollar was on the top of the range and there was opportunity to short that currency. Okay, until here. Now, is this the only opportunity on the market? No. As I was saying, the US dollar is a very good safe haven. But what else is the safe haven? Because Satish have mentioned that the money flows into the safe haven, like US dollar, CHF, and Japanese yen. But there is something left. What is this something? Let's see if you guys know. It's going up really quick in the last couple of weeks. No, not JPY.
Yeah. I'm just gonna give that access.
You guys are close. Think about it. Gold. There it is. Gold. Good, Barry. So yes, it's gold. So gold is considered a safe haven for some reasons as well. Okay, so if we look at here, gold prices, we trading on $2,651 at this moment. Okay, at this moment we were trading, but the actual highs was on $2,685.67. Okay, so gold has done a pullback since then, but nothing major, because if we look on the price, it's only 1.3%. This is nothing. For compared what gold has been going up for the whole year, look at that, right? Let me show you. There we go. So if you look 2024, right here, 2nd of January, 2024. This candle right here, all the way up now, it's 28.70%. This is without leverage, because with leverage, you could be making much more. So let's say like one of my friends, he had an account with $10,000. He bought some gold on this area, beginning of 2024, bought some gold on this area and some gold on this area and this last area here. He's floating, all right, with $10,000. With $10,000, he's making now $500,000. Of course, he could lose everything of this $10,000 if the market was on the opposite direction, of course. But he took the risk, he took the opportunity, he knew why, he knew how, he knew when these things were happening because he's a very fundamental trader. So therefore, he's floating $500,000 right now. Okay, so there is opportunities on the market and there is plenty of opportunities. If we look at here, we've seen gold coming up from the actual 24th of September and reaching all-time highs on the 26th of September, in 2 days only. So the reasons is, of course, a lot of reasons, but I think the major reason is a hedge of inflation, and as well the geopolitical and economic crisis. So gold is considered a hedge of against the inflation. And we can see that when inflation rises, the purchasing power of the money will decline, as we all know. So the $50 today is not the same $50 from 5 years ago, because from 5 years ago, we didn't have the inflation that we have today. And therefore, the purchasing power of that $50 is completely different. Okay, so then gold prices tend to increase, and this is because of the gold value isn't tied to any specific currency. We did had some currencies pegged to gold, but then they sold. Okay, this is way back into maybe, I think I was 1870 something. So that's a long time ago. Even you guys, if you like to read, you could read Milton Friedman books. This is a really good book, Capitalism and Freedom. This is a really good book to read about currencies. Okay, so and currencies is Forex. So he talks about pegged currency, he talks about inflation on the currency, he talks about everything about currencies. And when I wrote the book, I think it was 2 years ago, 1.5 years ago, I was like, now I understand why the pegged currency didn't work. All right, because if you guys don't know, US dollar was pegged into gold. Does anyone know this?
We also don't do
Or is it something that no one knows? No one knew it. I can talk about on the next webinar. I can put in the programmation for the next webinar into the subject. So yeah, gold, US dollar was pegged into gold way back. Even I think I was born, or maybe everyone here was born. But gold was a currency, and that currency was the US dollar. So moving on, as we're saying, gold is another opportunity as well on the market to continue to go higher. Now, what is the best point to buy is the big question. But with technical analysis, we can have a look on it. So let's have a look on it. Okay, this is a 1 hour chart. I'd like to use Fibonacci on gold. It's really handy. Okay, cool. Yeah, this area here, okay, this whole area has been a point of contact with some sort of order, some sort of market instability, some sort of economic instability, and that made gold some way attractive to this area. And I definitely believe, let me just move it. Yeah, I definitely believe we can come back down to at least a 50% retracement, okay, to a continuation high. Remember, guys, we only have 3 more months to finish the year. And that friend that I've mentioned, that he's floating now $500,000, he's looking to go trade to $3,000. Okay, so that is right here. So this is the price. $3,000. So if you look halfway, we've been there already. Okay, let me put this on a 4 hour. There we go. So 4 hours. So we're already halfway there. Okay, we're even more than halfway there. So we start the month on the year right here, $2,043, and we are already in $2,649. So pretty much $600 increase. Why not another $400? Why not another pretty much $300, right? So yes, I'm a big believer that we can see gold prices sparking higher, right? Okay. Now, does anyone have questions? Is everything clear? Yes. Okay, cool. All right, moving on. Another opportunity I think it's really worth to talk about is USD CHF, right? As I've mentioned, probably you guys haven't had time yet to watch my video from today, but I've mentioned USD CHF can go higher. Yes, USD CHF can go higher because between okay, let me ask this question. Between USA and Switzerland, which one would you pick? Which one would be stronger? The US dollar or the CHF? Sweet's asking me a question. I got in late, so I don't know if you have talked about the DXY. Yes, I did, my friend, but I can run over just after I finish this. Steve-O says USD. Yeah, that's correct. So the US dollar is stronger in this case, USD, because of the current rate. That is correct. That's exactly what I was going to be talking. Yeah, good. Everyone thinks that perfect. All right, USD, 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 a lot of answers. Cool. Yeah, so US dollar, it's going to be stronger. First, because of the stable and always known stability on the economy. And second, but most important, is look at that. Switzerland. Sorry, there we go. This one and USA.
Not 100% sure.
Perfect. Okay. So right now we are at 1%. We are at 1% interest rate on Switzerland. So if you park your money there, it's safe. It's really safe. Switzerland, it's safe. Never on fighting or threatening any other country. It's safe. But you only get paid 1%. So if you have $10,000, you're only going to be paid 1%. Now, on USA, you're getting paid 5%. Okay. So 5% is much better than 1%. You're getting paid 5 times more. And it's USA. It's safe. I, of course, won't say that it's safer than the CHF, than the Switzerland, but it's safe. Okay. And we can see that on the 1 hour, the market has been feeling it as US dollar is safer. Okay. Lauren say that CHF CPI, Switzerland CPI is also at 0.8% now year on year. Yeah, that's just proving to us that they pretty much, they were the first country. I remember that I was traveling last year in June, if I won't forget my mind. I was traveling to Gold Coast in June last year and I was on the airport waiting for the CPI from Switzerland, and it came in as lower than expected at 2%. So they were the first one to control inflation into the G10 and G8 group. Okay. Of course, because they had really good balance sheet of payments. Really good balance sheet from the central banks, and they've controlled well how to put money in and how to take money out from the population. So they've controlled well the assets and liabilities from the central bank, like a quantitative tightening, quantitative easing. Okay. Quantitative easing, giving money to people, quantitative tightening, taking out the money from the economy and making it less, so the money value goes up. Okay, and then after that they started to cut the rates. So yeah, they've done a pretty good job. Okay, one of the best jobs, I guess, I believe. And the numbers speaks for themselves, because CPI, as we know, 0.8% now year on year. Okay, so, and as I was saying, the population, the market is starting to feel it. The market is starting to look at it and thinks, oh well, that's good. Look at that. The US dollar is much better than the CHF. Therefore, let's long US dollar again. Okay, so we can see from just at here, this is a 1 hour chart. From the last hour, we had 0.4% increase on the prices. So there is definitely other opportunities here on USD CHF. Now, do I believe it can continue to go higher? I don't believe it can continue to go higher. I believe it can continue to trade on this range. Okay, until it breaks to the top or the bottom. But you can trade on these on this range. Of course you can. You can short here, you can long here, or you can short here to maybe believe in a breakout, or you can long here believing in a breakout as well. You can, the sky is the limit here, right? It's pretty much it. So what I believe that can possibly happen is a pullback, all right? Not because CHF will be stronger, but because of the US dollar will come lower, the US dollar index. Remember I've said here, US dollar index. So US dollar index, we will probably coming back to lower, somewhere around here, and then somewhere around here, and then here, sorry. This is the first target, 101.250, and then right here is the second target, and last target, 100.400, okay? Steve will say, perhaps the US election next month may cause the DXY to retrace in the current range. Yes, I believe on that. I believe on that. But what is shaping the market at the moment? What is shaping the currency market at the moment is, first one, the rates, inflation, as well as the geopolitical tensions that is happening right now, okay, and gold prices. So I think these four factors is more risk off. Yeah, Lawrence just say it's more risk off mood. And I believe we can continue to see that in the coming month, the whole October. But the month of November will be really special, because we have the federal FMC rate statement coming out, and the decision rate, and that will be really important to see whether we're going to break through or we're going to break down. My opinion, and I was talking to Nathan Bray this week, and he has a really good way to explain it. I'm not that good on like him to explain things, but he was saying it's like, you know, you're having like ups and down moves, and that's pretty much what I'm expecting for the next Fed rate decision on 7th of November. Elections happening on the 5th of November, and the Fed is happening on the 7th of November. So really great how things are moving. Okay. All right. Let's move on. Another opportunity, I think there is plenty of opportunities in the market right now, is of course GBP USD. Sorry. GBP JPY. There we go. Perfecto. 15-minute chart. There you go. Cool. Okay. I believe we can come back to these levels. Okay, of 189. 189 to 100 would be more ideal. There we go. 189 to 100 is the level where I'm looking at. Of course, short in here would be the best, but we don't need to take all the best positions ever in the life, right? So most likely here, to a stop loss somewhere around here. Yeah, and then take profit down there. Even a target stop loss somewhere. Yeah, somewhere here would be good. Something like that would be good. Okay. Reasons being that the Bank of England is looking to do a few more cuts this year. Okay. Remember that last month they haven't cut, so they were expected. The consensus was expected to maintain 5.25, if I'm not wrong, the bands, and therefore they maintain it, so they haven't changed anything in the rate, but therefore most likely we will see a decrease to 4.75 this year, end of this year, and this will weaken the pound, okay, making the JPY stronger. And bear in mind that the Japanese yen is not that strong at this moment, but it's going to be soon. All right, it's going to be very soon. So I think there is a really good opportunity to the short side on the GBP JPY as well. This is only this is only my opinion on this pair. Okay. Now, moving on, I do believe that these are the best opportunities: Euro dollar, US dollar index, as well as the GBP JPY, US dollar CHF, the best ones at this moment. Okay. Now, let's move on for the next topic. Okay, Lawrence has sent a message this morning mentioning that they are ready to be aggressive. Yeah, exactly. That's exactly what I've just said. Yeah, so the Bank of England in an interview this morning, that's what Lawrence say. Okay, so the Bank of England in an interview this morning mentioned that they were ready to be aggressive with rate cut if inflation continues too slow. I do believe on a lower inflation, especially with all this money moving out from most of the countries to the US dollar, to the USA, you know, for the tensions, most probably the balance of payment will decrease, and therefore inflation will continue to escalate it down bit by bit, but you know, coming down. So most probably we will see more aggressive cut from the BOE, and maybe 50 basis points cut. Who knows? Okay. All right. So let's move on for the last topic. That is NFP expectations. Higher or lower? Where to? Okay. So let me close this. And let's go to finlogics.com and let's go into economic calendar. Okay. Perfect. Let's see if the charts came back to work. Sometimes it happens, guys. Yeah, it's working now. Even here we go. Yeah, it's working. Yeah, we can see that there was a little bit out of data here, but that's fine. Okay, at least it's working, so you guys can use it fine. All right. Tomorrow. Perfect. All right. So we do have some things happening. We have the ISM services PMI happening midnight today. Well, not today, tomorrow. Midnight tomorrow, but it's, you know, it's today. I will be awake at midnight. So tomorrow, as well as the average hourly earnings, the year over year. But the most important two ones is the unemployment rate for the month of September and the non-farm payroll for the month of September. Okay, I just want to touch base on this guy here. And I want to touch this. On the month of September, we had the 17 to the 18. We had the Fed coming in and giving a projection material to, let's say, HTML. Unemployment rate right here. So 2024, they're expecting to finish at 4.4. Okay, and right now what is happening is that a forecast is 4.2. So remember, there is a chance of the actual unemployment rate coming higher than 4.2, maybe 4.3, 4.4, even 4.4. Okay, so just remember that, guys. And this, of course, Geopolitical came in and say unemployment rate's still pretty low, but we are looking to, have a forecast to 4.4. I do believe 4.4 is not low. It's continued to be higher. But this, if it comes higher, this will be weakening the US dollar and therefore fulfilling the move down where I'm believing to trade long on euro dollar. Now, coming back here, tomorrow, the non-farm payroll is expected to be at 140,000 from the previous of 142,000. So the last two releases that we had was lower than expected, and we can see here. So the expectation was 160,000 and the actual came in at 142,000 for the month of September. Now, for the month of August, we had 175,000 expected and only 114,000 actually that came in. Okay, if we look to a 3-year histogram, we of course saw some huge numbers here after the COVID, but right now it's only sort of decreasing. So I do believe on a lower, okay, we may see lower numbers on the non-farm payroll. Okay, now of course, as I always say, the non-farm payroll, it's not only one release, it's not only the non-farm payroll. We do have the NFP, we have the unemployment rate, and most importantly, the average hourly earnings. Okay, so all of these has to work combined. Okay, if we look here, is expected to be 0.3% from the previous of 0.4%. So again, decreasing the average hourly earnings. It's always around 0.4, 0.6, 0.4, 0.6, as we can see here, 0.6, 0.4, 0.5, and it goes like that. It doesn't much change, but the lowest point we get, it's 0.3. So yes, most likely from 0.3, 0.4 to 0.3, most likely in line with it. But again, the non-farm payroll probably around 140,000 or lower, and the unemployment rate probably a little bit higher. So all combined, if it comes in as I'm expecting, this will make the US dollar weaken, okay, and make euro be stronger, and therefore looking to trade euro dollar higher to, let me check here, 50-minute, to the areas of somewhere around between the areas of 111, 300. Okay, or if everything comes lower, then yes, I do believe that the euro dollar can come back to these areas just because it's very close and haven't yet touched it on the air. So most likely we will continue to see a decrease. Okay. Reginald asked, what can I use to help learn to analyze an NFP? I could do a video on that, guys. I can do a video on how to analyze NFP. I can definitely do a video. So stay tuned. Next week, I will be doing how to analyze NFP. When are you going to do a webinar explaining about economic analysis using spreadsheet? Oh, Satish. Wow. I think this is very complex, but I can bring the topic down. I do have some sort of spreadsheet I can show you next Tuesday for sure. But yeah, okay. I love these two, how to analyze NFP and how to analyze economic data using the spreadsheet. Live with me. We're going to do evergreens on that. Okay. This month is due. All right, guys, thank you so much. So basically, we had a look on geopolitical tensions and how and why this volatility on the market and how we can catch those opportunities. and what's going to happen with the NFP expectations. My expectation is that it comes lower, therefore weakening the US dollar. Okay, guys, thank you so much again. Have all a great weekend ahead. I hope to see everyone back here on Tuesday. And if you have any questions, then please send through the Telegram. I will always be here. Thank you, Lawrence. Thanks, guys. Ciao, ciao. And I see you next Tuesday. Not a problem, sweets. Thank you. Bye-bye.